All right, traders, a quick news update. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, traders, I was looking at this article here from Zero Hedge, and I've been reading a lot of articles lately about Zero Hedge, and I'd like to share some things with you that I'm reading. Insider stock buying drops to lowest records. Ask corporate insiders what they think about their economy and stocks, and you will always get one answer: nothing but upside. Judging by their actions, however, one would get a very different picture. According to the data compiled by Bloomberg and Washington Services that goes back to 1988, the number of officers and directors of companies purchasing their own stock tumbled 44% from a year ago to just 316 in July. The lowest monthly total ever, with 1,399 executive unloading stocks. Sellers outnumber buyers at a rate that was exceeded only 2 other times in history of the series. With equities setting records, insider purchases are dwelling, with 2 buying for every 9 that sold. At 0.29, the buy-sell ratio is about 1/3 of what it was in February and last August, and compares with the average of 0.69 over the last 3 decades. And they go in to talk a lot about obviously more about, you can see here, if I bring up this chart here, you can see that the number of insider buys, you can see it's just, this is lower than it has been for the last decade. But you can see what's happening with this. But the S&P index just keeps rising. Really, really, really interesting. Now, what's been happening, as you guys know, right? And if you go back to this bit here, is that the debt-fueled buybacks. You can see here that the S&P growth has had very little growth. Like the earnings per share has actually dipped into the negative territory. But look what this here: percentage of buybacks funded with debt is at 30%. This is almost going back to as high as the 2001 tech crash. You saw it last time we got back here in 2011. You saw what happened there, right? And you see where it was here in 2007, 2008. But last time we got back here at 2011, we know what happened. That the market came down. Silver was spiking, and the market came down. Right, and then you can see back here in 2001, you know what happened in 2001. We got obviously September 11th, that happened there, and obviously the tech bubble as well too. So guys, looking at this here, you can see that everything's been fueled by the Fed, everything's been fueled by the government. Now we all know that, all right? We all know that. But the question I'm going to ask you guys, the question I'm going to leave with you here is this: obviously, insider buying is dropping more and more and more and more. We shouldn't be rising to new highs. We obviously should be dropping down to newer lows. Now, yes, obviously everything's been done by the Fed, but how much can the Fed go before they can't even pay back the interest payment? Because right now, one of the reasons why they're not raising the interest rates is because of their interest payment. Like they're just getting in line with their interest payments right now. Well, that's what I read a couple of weeks ago, anyway. So guys, there's gonna be a point where things start to fall apart, right? Because the government's gonna stop buying back these shares. The insiders are not buying; they're selling. For every 2 that's buying, 9 is selling. So you're obviously getting more selling pressure than obviously buying. And guys, you can see what's going on with the economy. So guys, I'd love to hear what your thoughts are about this here. I believe there is going to come a time where there's going to be a sticking point where the Fed just cannot keep going. And yes, they may do some more QE or something like that. But how are they going to pay back for this debt? How are they going to pay back for even the interest payments? Because remember, guys, they've got to pay back their debt, right? And if they can't even make an interest payment, guess what happens? They default. What happens if they default? We see what happens in other countries, right? We see pretty big crash really quickly or not a, shouldn't say a crash, a big down move pretty quickly in the stock market. And that creates a lot of fears and so on and so forth. So it's really interesting to see how everything's going this year, guys, and what's happening here. Where do you think we're going to? How do you think we're going to be, moving forward at the end of this year, moving into next year? Are we just going to find a sticking point where we collapse? Do the government keep printing money and then eventually default on an interest payment because they can't afford to pay it? Do they raise interest? Do they raise taxes? Do they drop the interest rates or even go negative interest rates? Really, really interesting to see how this is playing out, guys. Absolutely crazy. Let me know what you think.